uni. They apparently taught him a few things, including how to back the Maroons. Yeah, look, there you go. All right, let's talk about this fellow. Tim Davidson, Managing Director and CEO of Meeka Metals. Now, Meeka Metals is a gold and rare earths company. They have got a portfolio of actively expanding high-quality projects across Western Australia, including gold in the Murchison. They've got rare earths down in southern WA. And Tim's going to present the company's recent successful results and also their upcoming programs. Would you please make him very welcome?
Thanks very much for that kind introduction, Chrissy. And she said I could get 20 seconds extra for each cake that I brought her. So I brought her 3 little cakes. No, but it's great to be here, and it's great. Okay, it's great to be here to share the Meeka story. And from a corporate perspective, we're led by an experienced team, and a team that's got a demonstrated track record of creating value in the resources space. Our chairman, Paul Chapman, is involved with a number of companies, most notably Silver Lake. He was the founding chairman and shareholder of Silver Lake Resources, what is now a $1 billion gold production company. Roger Steiner-Price, a lawyer out of Perth, involved with a discovery that was taken over at a significant premium. And separately, Paul Adams, a geologist who was the managing director of Spectrum Metals, which discovered the very high-grade Penny West deposit in Western Australia that was again taken out at a premium. So we've got a board with the right experience and the experience to create value. And more important than that, it's a board that's invested significant amount of their own money in this business. So $2.8 million to date. So we're well aligned with the rest of the shareholder group in what we want, where we want to take this business. In terms of the capital structure, we closed yesterday 3.3 cents, market cap of around $35 million. A strong cash position gives us an enterprise value of around $30 million. And if we look at what underpins the value, or that enterprise value, or the value of the business, it's largely, or we think it is largely, our high-grade gold resource in the Murchison, and we're moving that. We're working towards developing and producing from that asset. And to that end, it's a 1.2 million ounce resource, 3 grams per tonne. It's located in an area with fantastic infrastructure, built infrastructure, existing infrastructure that's already in place. And we've got a feasibility study that we're concluding now that'll be out in the next week or so. So that's something to look forward to. Just in terms of that region and our peer group, you'll notice we don't have the largest resource, 1.2 million ounces. There's companies with a larger aggregate resource than us, but we have the second highest grade resource in that region. So 3 grams per tonne. The only company with a higher grade total resource grade than us is Wellman Mining to our east. So that's really important, and it's something that differentiates us from our peer group in that area. All of our resources are located on granted mining leases. That's important from the perspective of trying to get these assets into production. Speeds up that timeline for us, and we've got a significant land package. So outside of what that gives us the opportunity to do is grow the resource outside of those existing deposits that we've got. Now, if you look at what comprises that 1.2 million ounces, it's Antywell, Turnberry, and St. Anne's. So 3 deposits. We're not spread across multiple, lots and lots of different small deposits. It's largely in 2 deposits and a small satellite deposit at St. Anne's. And that's really important for us when we look to monetize these assets, and we'll flesh that out with the feasibility study that we're going to release in the next week or so. But it's largely coming from 2 areas, so it's not very complex, reduces the complexity, it reduces the amount of development work that we need to do as we look to develop these assets. And a key focus for the business now is to grow that resource, and we hope that that growth will lead to an expanded production profile or an expanded mine life, or both. Now, the assets themselves, Antywell, a very high-grade gold mine. This was in production up until 2017. It was in a gold price environment about half of what the gold price is today. So it was shut down when the Australian dollar gold price was put on care and maintenance, I should say, when the Australian dollar gold price was about $1,600 per ounce. It runs, it produced over 300,000 ounces at 8 grams per tonne. It's got a 500,000 ounce mineral resource at 8.6 grams per tonne. That's what's in the ground now. It's got fantastic and really valuable existing infrastructure. So there's workshops, stores, powerhouse, a partial mill on site, and extensive underground development that we'll use to re-access the underground and as we look to put this asset back into production. The other really important thing about this asset is that it's right now, the resource is contained within 5 separate lodes. 3 of those lodes, so over half of those lodes, have never had any mining. So they were discovered late in the mine life or in the previous mine life, and they were never developed. So these are virgin deposits, and it's really important when we look to put this asset back into production. We're not going and doing remnant mining, we're going and mining completely new ore bodies, and that's really important from a productivity perspective. The second large resource that underpins our 1.2 million ounces at our Murchison project is Turnberry. So Turnberry's got just under 700,000 ounces at 2 grams per tonne. It's got an ounces per vertical metre, 1,600 ounces per vertical metre in the top 200 metres. And we think that the only thing limiting that at depth is drilling. So it drops off below 200 metres from surface because we haven't gone and done a lot of drilling below that point. So we think there's a fantastic opportunity to expand that resource, to grow, upgrade and grow that resource with further drilling. The other important thing is this deposit's on a granted mining lease. So that again expedites the process as we move from through development and into production. A lot of that, that timeline becomes compressed because it's on a granted lease. It's 15 kilometres to the southeast of Andywell, so it's very close to the Andywell mine site. And that's another important factor. Our resources are all very close to one another. It's a well understood deposit. Over 80,000 metres of drilling have gone into this deposit, largely in the top 200 metres. So we understand the geology, we understand the controls on mineralisation, and that's why we're confident that with further drilling, we can grow this deposit at depth. This is a long section of Turnberry, so it's got significant strike, 1.7 kilometres. And you'll see that the resource drops off below about, or the classification of that resource drops off at about 200 metres below surface, and that's a function of drilling. So St. Anne's, this was a very high-grade deposit that we discovered mid last year. We started drilling it in June of last year. We very rapidly set about drilling that out to the point we could put a resource around it, which we did earlier this year. While it's a small resource, you'll see on the bottom left-hand side of the slide there is a lot of high-grade hits, drill hits underneath that open pit that constrains the resource. So we think that there's great opportunity to grow that high-grade resource. It needs further drilling. So it strikes over 550 metres, so half a kilometre. It's a virgin deposit, never had any mining. As I said, we discovered it mid last year, and that will be an important part of the mining studies that we're about to release. In terms of growth outside of those resources, so the greenstone belt that hosts both Turnberry and St. Anne's is it's a really important part of our exploration plans going forward. So outside of Turnberry and St. Anne's, which combined strike over about 2.5 kilometres, there's been very little drilling within that greenstone belt, but we know there is strong gold mineralisation. The fairway shear zone that rips through the middle of that greenstone belt provides the conduit for that mineralising fluid to come up through the rocks, and then the favourable mafic rocks geochemistry there helps precipitate that mineralisation out. So it currently hosts just under 700,000 ounces, just over 700,000 ounces with St. Anne's. However, 90% of that shear zone has had broad-spaced, ineffective drilling. So 100+ metre spacing between holes, which is really good for mapping the underlying geology, but it's not good for discovering new deposits. So we've got a fantastic data set to guide us to the right rocks. We just need to go and do some denser drilling to go and discover these ore bodies. So that's what we'll do over the next 12 months as we progress towards mining. So outside of the Murchison, but very much complementary in the gold space, is our Circle Valley project. Now, this is in a completely different terrain to what we see in the Yilgarn and where our Murchison deposit is Murchison project is located. It's much younger rocks, it's Proterozoic rocks. But if you look at the ingredients required for a large scale gold deposit in these geological terrains, we feel that we've got all the main ingredients. We're in a zone of major tectonic activity. We're right on the margin, that southern keel of the Yilgarn. So there's lots of things happening there from a tectonic perspective. There's what appears to be a large granite intrusion to the south of us, which provides a heat source and motive force to get the mineralizing fluids moving. And as you can see from the magnetics on the slide there, it's got a very complex magnetic signature. So there's lots of structural discontinuity and complexity there to provide conduits for the mineralizing fluid to permeate up through those Proterozoic rocks. And what we see when we go and drill this deposit, and bear in mind it's had very limited drilling at the first RC drill hole into fresh rock we drilled in 2022, early 2022. Our first hole we drilled, very first RC hole we drilled, we hit 23 meters at over 5 grams per ton. We followed that up with numerous other drill holes, still early days, but getting some strong gold, primary gold mineralization and shallow gold mineralization. So this is a really interesting project for us. It's a lot earlier stage than the Murchison Gold project, which we're looking to put into production, but we feel we have the opportunity to grow, to drill out and grow a significant resource here. So this is very much complementary, although in a different geological terrain to our Murchison project. And while we were down there in 2022, something that we identified through the air core drilling that we were doing at Circle Valley was the presence of these clay rare earths. So we set about compiling a large portfolio of land down there, which we've done. So between Circle Valley and Cascade, we've now got 2,500 square kilometres of really prospective clay type rare earth mineralisation, or geology hosting clay type rare earth mineralisation. It's very high grade mineralisation from a clay perspective comparative to what some of the other explorers that are looking for these types of deposits. We own these projects 100%. Again, similar to the Murchison, they've got fantastic access to infrastructure, both rail and highway networks running through or adjacent to our tenure. There's the Port of Esperance, about 100 kilometres to the south of Circle Valley and directly adjacent to Cascade. So good infrastructure, great location, very fertile geology. And I'll explain what I mean by that fertile geology right now. So over the last 12 months, we've been drilling out both reconnaissance drilling and then early this year, infill drilling for a resource at Circle Valley. It's got a very high proportion of those valuable NdPr magnet elements, so the elements that you need for permanent magnets for electric vehicles and wind turbines. These are the things that drive the economics of all rare earth projects and the things that are forecast to have significant demand appreciation over the next 5 to 10 years. So our deposit has a very high ratio of NdPr relative to the other rare earth elements within it. It's just under 100 million tonnes at 890 parts per million. So a reasonably high grade clay type deposit with the right proportion of magnet metals, of those valuable magnet metals. Within that larger resource, and importantly, when you look at how we're going to go and monetize this, the metallurgy is really important, but you also need the grade. And within that larger resource, we've got 13 million tonnes at over 1,000 ppm at 1,400 parts per million total rare earth. So not only has it got a very high grade component, but it's got the right mix of metals and importantly, a very high proportion of those NdPr magnet metals. The drilling that we've completed identifies the fact that this mineralization looks to be, it's open to the northwest and it looks to extend out that way. So that's a great opportunity for us as we look to grow this. It's not the key focus of the business right now. Our key focus is getting the Murchison Gold project built, constructed, developed, get into cash flow there. This is a really exciting opportunity, but a lot more early stage. The focus for us with the rare earths going forward is going to be on the metallurgy, to unlock the metallurgy. We'll have some news coming out in the next 3 to 4 weeks that outlines some of the work we've done on the metallurgy, and it's looking very positive. So we believe that we've got a pathway to move this to economically recover the rare earth elements out of this, and we're working to demonstrate that. Just quickly at Cascade, so the sister project is Circle Valley. It's a lot earlier stage than Circle Valley. It doesn't have a resource. We've drilled over 1,000 square kilometres reconnaissance drilling. That's what you can see on the bottom part of the slide there. That's 100 kilometres east to west. We've got high grade rare earth, clay type rare earth mineralisation all along that corridor. We haven't drilled the northern half of that tenement, but we've got high grade surface samples, which is really unusual for these clay style deposits. Usually get depletion at surface. The fact that we're getting grades up to 600 parts per million at surface and again, a high proportion of NdPr magnet metals, that's really interesting and a really compelling target for us. Rare earths going forward, the focus will be on the metallurgy, but there's some really exciting opportunities for us in terms of drilling and growth down the track. And that's me, Chrissy. Thank you. Thanks very much.
See, you're very well, you're a credit to your family, you are. You finished right on the zero, and I put up my tea to give you your extra 60 seconds for those 3 bits of cake, which were pretty bloody impressive. I'm very impressed. It still looked like you were drinking a beer on stage, but that's okay. Right, our next presenter, our next company, Golden Mile Resources, and quite frankly, it's a wonder they actually made it here today because they have been really busy. This fellow's been on the road. There's been a lot of positive company business to take heed of. They started last week with a spectacular drill hit. Then they had their oversubscribed capital raise the following Saturday. Opened in the morning, closed it by lunch, all went home and celebrated because they were oversubscribed. And then, in the middle of everything else, they welcomed a new CEO. He's a West. Wait, let me tell you, he's a West Aussie. They got him over. He's actually been here in Brisbane for a while. He said to me, and this is his way of ingratiating himself to all of you, that if he could live in any other city in Australia, he would live in Brisbane, because he'd live in Brisbane and he'd barrack for his favourite team, which would be the Maroons. That's right. Okay, I'm not even game to say it now. You've all scared me so terribly much about how to say that blurry name. This fellow is called Damon Dormer. He is the new CEO of Golden Mile Resources. Please make him very welcome.
Thank you very much. And it has been an absolute whirlwind of a stage so far, being the new CEO. So I've been in this role since the start of March, and just last week got then made the MD of the company as well. So moving along. So I'm here today to talk about our Quicksilver project. And we've got this really interesting, large nickel cobalt project of what it is so far. And what we want to do is how we drive our value from that. We'll assume for the purposes that the disclaimer is read, but really to start talking about Quicksilver itself, it's a 26.3 million tonne deposit at 6.64% nickel and 0.04% cobalt. Contains basically about 180,000 kilotonne of contained metal. And we've also had significant mineralizations to date so far of rare earth oxides. And we've seen over 4 meters at over 3,000 ppm trio, and we've also had, including that's a meter of almost 8,000 ppm trio. In addition to the rare earth oxides, we've also got high-grade scandium mineralization within the deposit. And for an example of that, we've got the 32 meters of 124 ppm, and that includes 20 meters of over 150 ppm in there as well. And there's significant mineralizations contained within the envelope of what is Quicksilver. Importantly, I'll point out one thing, so I will talk to it later. There has been no drilling at depth below the oxides at Quicksilver, and there's a lot to talk about later on that very thing. First of all, where are we? We're located near Lake Grace in Western Australia. Now, Lake Grace is a very well mature country town in farming region. We have access to multiple ports. We're effectively in the centroid of 4 ports in Western Australia. We also have a rail network that runs literally right through Lake Grace and services both Albany and Kwinana. We also have power right up to the farm gate. And obviously we've got a very well-established, well-facilitated town. And that's important because that gives us a lot of optionality on how we handle our transportation and shipping of what we see as our final products for what we can deliver from Quicksilver. But firstly, I think it's really important to highlight with where the market's going. Now, this is a report that comes from the US government, and I really encourage everyone, if you get a chance, it's a fairly lengthy report, but it's good to have a read of it, because this looks at the criticality of an absolute array of minerals. Now, a long story short, with the criticality matrix, if you're looking to develop a project and bring it into production, and obviously it's going to take a couple of years to get through the study phases and move towards a construction front, you want to my apologies on that. You want to be, very simply, in the top right-hand quadrant. Right, they are the most critical on the assessment. Now, we're fortunate enough to have 4 minerals within our ore body that sit within that zone, and we also have the potential for further things at depth under this thing. On the right-hand side, what you've got is the demand curves. Now, it's a very extensive analysis which the US government does, and this looks at obviously different scenarios around that. Now, the critical thing with all of this is when we're starting to look at 2025, which is where we want to start seeing ourselves, every single one of those curves is significantly higher than the current production rate of nickel. So it's very easy to tell what demand is going to do to the nickel price. A little bit about Quicksilver itself, because the resource on Quicksilver was announced in 2018. Back then, it was thought to be this simple nickel cobalt deposit, which would require a high cost of processing to extract value from. And this isn't the case. What we know of Quicksilver now is that we can get to nickel cobalt concentrates, magnetic chromium nickel concentrates, industrial aggregates, form this multi-commodity stream of products. And then we have on top of that, the significant mineralization of rare earth oxides and also scandium, which we can look to derive further value from. And we actually have underneath this ore body further potential of primary rare earths and disseminated nickel sulfides under this thing, which we're going to go test for, and I'll explain why shortly. So why has this changed? Because the first piece of drilling that's been done since 2018 was the drilling we just completed recently. It's really simple. We've changed the people. We've changed the board, and we have complete alignment and focus on how we take Quicksilver forward, and also a complete focus on data analytics, how we dig into information, how we interrogate what we do. And we've had both some brilliant metallurgical work done, which has driven our metallurgical test work campaigns. And also, if you've been following the announcement, you'll notice that there's a lot of very detailed geological analysis, which has opened up a lot more of the significant mineralizations we've already identified, and also the further potential exploration targets under this deposit. So the stage 3 metallurgy, we're currently doing that stage 3 metallurgy. The assay results that came out last week were a function of the drilling we had done for this, and we had collected 1.6 tonne of metallurgical sample for this test work. So what we're looking at is a very simple beneficiation system to develop the concentrates we need to. So it involves screening, scrubbing, cyclone test work, and magnetic separation. And the simple reasoning for that, the screening work maximizes how much industrial aggregates we can cast off from the feed, enriching the remaining material. The scrubbing work allows us to optimize the splits between the different concentrates. The cyclone work there is to optimize the nickel cobalt concentrate grades. And on the flip side, the magnetic separation is there to maximize the iron in the concentrate in the iron chromium nickel concentrate. Additionally, we have the rare earths, and a part of that test work, which we see as a phase 2 test work, which I'll go into more detail on the next slide. We want to test the concentrates of both where the rare earths report to and also the scandium. Because the way we will look at mining this thing is, this is all in the same envelope. And it's really important because the way we mine this thing is that scandium, rare earth oxides, and those type of things effectively get free carry, not only from the mine, but through the processing system, because our primary value driver in this is the nickel and cobalt concentrate. So we've already got good grades sitting on the mining side and at the drill bit. We're going to be fascinated to see what these become, in which stream they report to, and what those grades go to. Now, this is a really busy slide, and I would encourage people to have a look at it in more detail. But what this shows is the overall program and how we are eating the elephant, so to speak, on our workflow through the metallurgical work. It's also to highlight how we get to our critical path through the phase 1 work, because that critical path identifies, assuming that the metallurgical work comes up the way we expect it to, drives the critical path on how we turn this project and move it into a formal scoping study. But talking just to a few key elements here, the first part of it all is quality of data. Can't stress it enough. When conducting a lot of technical work, you have to make sure the quality of data is the best you can pragmatically get. That's why when we did the drilling, we drilled at PQ Diamond to give ourselves the best quality of core to do the most analytics we possibly could. Now, with that 1.6 tonne, that enables us to do a lot of test work. It covers this campaign, as well as doing a lot of additional test work that we see can crop up. And that's essential. The second part on the timelines, we can see that the screening and scrubbing test work, that effectively becomes complete at about the end of July. And the MagSep and the cyclone work finishes about the end of August. And then obviously we go into a review of the flow sheet. I'll just point out the timeline as well on the concentrates around our rare earth oxides and our scandium. We'll be following that through. It is in a phase 2, but does run parallel to phase 1. And around the end of August, we'll also be seeing those results. And then lastly on it all, we'll still be doing a review of secondary processing to test the options on what we can do there. Because previous test work was done on raw sample. When you're taking an awful lot of silicate out of the plan and forming industrial aggregates, that's a very big acid consumer, and we want to see what can become and test the potential of secondary processing. But that's not to take away from our key business case, which is a simple beneficiation system. Just a little bit on mining. This is in the oxide. It's a really simple mining proposition. It's free dig. There's minimal infrastructure required. There's no, obviously with no drill and blast, there's no associated drill and blast infrastructure. This thing is long, it's wide, and it's shallow. This gives us a lot of schedule flexibility and the ability to optimize grade feeds and everything else on how we mine this deposit to improve and keep driving up the value of the project. And it's got a low stripping ratio. We're effectively in beds sitting in the top 90 meters of the earth before we hit the primary zone. Deliberately put up the grade tonnage curves, and really what we see in here is the ability with adjusting tonnage profile is to improve grade and change profiles on how we do things according to different markets in there. This was last week, and yeah, it was a fantastic day, I gotta say. We hit 28 meters at 2.34% nickel, and that also includes 0.11% effectively cobalt. That's within 49 meters at 1.74%. And with that, the high grade highlights in that, obviously we had the 2.3%, but we were getting intercepts of up to 4.14%, which is the highest ever grade that's been hit at Quicksilver. There's also another band within there, which is another 5 meters at 1.6% in all that. We can see elsewhere that with some of the other results, we're getting a lot of width, which is great for what we want to do because that also keeps the mining very, very simple. But certainly one of the things we look at in this, and when we move into infill drilling later on as a part of scoping study and get more definition, we've got to think about this because our target concentrate grade that we want to get to from the beneficiation system is getting over 1.5% nickel. If we start identifying more and more dirt that goes above our concentrate grade, that opens up the possibility of direct shipping. We simply dry it, we ship it. So portions of ore. Now, what does that do for us? That enables A, the project to be accelerated, and B, it allows for potential revenue streams while under construction of the beneficiation itself. You can adjust the mining schedule to bring high grade forward and potentially do that. And we'll evaluate that as a part of going forward. The other really interesting thing about the whole hole 8 in this program is that it's extremely unusual to get that amount of nickel in a hole in oxide. And this is leading us an indicator because this hole 8 sits on top of a large magnetic anomaly, and it's leading us to believe that there's the potential for disseminated nickel sulfides sitting under this thing. And that's why I bring you right back to where we were at the start of this, which is there has been not one single hole drilled into the primary rock underneath the oxide layer at Quicksilver, which, while quite astonishing, opens up a world of opportunity for us. Beyond the potential of disseminated nickel, we've also got the potential to have carbonatites underneath ourselves and also to have a large primary rare earth potential with an and/or proposition around the disseminated nickel. There's been historical evidence that gives us that we've seen monzonite in some previous drilling. There's been a lot of 3D modeling around this, and with 3D modeling, we've got an extremely high correlation of the rare earth oxides to a faulted zone, as well as which has allowed us to determine that our rare earth oxides are open both to the northeast and the southwest. And from that as well, we've got a big carbonatite magmatic signature associated with that as well. So there's something really big going on underneath us. We just don't know exactly what it is, which is why we're going to accelerate the drilling. We accelerate the drilling, we determine what we've got, and then we incorporate it into our future plans, including our infrastructure plans. moving quickly along. Since I started in February. So far, we've had significant rare earths confirmed in March. We've identified significant high-grade scandium as well, which occurred in March. We've collected 1.6 tonne of high-quality sample. We've commenced the metallurgical test work, and we've identified targets of primary rare earths underneath this thing, as well as disseminated nickel. And we've also had the spectacular hits. And in wrapping up, I will move past. This is out of date as of last week. Lots of things have moved around. We raised another 1.9 million, and we will update this accordingly from just completing a capital raise. And lastly, to finish, we have a simple, very simple mining processing opportunity for our 100% owned project, which contains 180 kilotonne of metal. We like it. The share market we closed at 4.4, and we're already up another 10 to 15% today. Thank you.
I called you the CEO instead of the MD. I got it around the wrong way. So you CEO, MD, everything. Well done, Damon. Thank you. First presentation in that role. So I'll give that one to you. Next one, I'm not going to be so kind to because he's a familiar face. Come on up here. How do companies fund their visions? That's a question many of us ask ourselves. Let me introduce you to Corey Nolan. For those of you who haven't met him before, he is the MD of Platina Resources. Platina is a gold-focused explorer targeting deposits in the world-class Yilgarn, Creighton and Ashburton Basin regions of WA. Now, they recently sold a little scandium project. What do you reckon they might have got for that? $21 million. So that's opened a pretty exciting new era for this company, serving to fund exploration and enable M&A activities. Would you please make him welcome?
Good morning, ladies and gentlemen, and welcome to the conference. It's good to be back here again. Last year, when I presented, we were part of a way through a transition of selling our platinum and scandium assets and repositioning into the gold sector. And we've made very good progress on that. We're nearly completed on selling our scandium project. Hopefully, we'll get that done in the next couple of months. And we've got 3 gold projects with 5 prospects pretty much ready to drill. So just wanted to give you a bit of an update on how that strategy is traveling. So we've got 7 projects in Western Australia. We're focused on the Yilgarn, Creighton and the Ashburton Basin. And our plan this year is to drill 3 of those projects. And we've recently joint ventured our Mount Nair project to Chalice Mining to capitalise on their expertise and also their balance sheet to fast forward that project. So that was a good deal for us. And 6 weeks ago, we announced the sale of our scandium project for $40 million. And that's going to leave us very well funded to achieve our objectives this year, drilling our gold projects. So our transformation nearly complete. We had three platinum projects spread across the planet. Obviously, that's logistically and difficult to manage from a cost perspective. And we've now centered that all into the West Australia region, predominantly around Kalgoorlie and a little bit up in the Pilbara, up in the Ashburton. So our sale, $14 million US, so about 20 million Australian dollars. It's a binding agreement that we've signed with Rio. It's only got one condition precedent, and that is for the New South Wales Mines Minister to approve that transaction. That documentation is with the Minister at the moment, and we're hoping that'll complete sometime in the next couple of months. The initial tranche of funding that we get from that sale is $8 million US, less a $1 million warranty payment. So we'll bank about $10.5 million in the first tranche in the next couple of months. And then we've got the ability to achieve another 2 milestones relating to the permitting of the project. That potentially brings in another $6 million US, or around 9 million Australian dollars. So we'd be pretty hopeful that we can achieve one of those milestones, which is about $4 million, hopefully later this year. I think this is probably the most important slide in my presentation, and it really just outlines our value proposition. So we've currently got a market cap of $16 million. We've got some investments of about $2.3 million. Cash at the end of the last quarter is 1.3. We're going to generate nearly $12 million in the first tranche sale of our Scandium project, which is implying at the moment that we've got less than $1 million worth of value on our gold portfolio in Western Australia. So I think that's very cheap. And then obviously if we can get some milestone payments, the current implied enterprise value in our company is minus $8 million. So my job now is to convince you that we can put that cash to work and generate serious value in our gold exploration activities. And this all comes at a time when we've got some really positive gold price momentum behind us, both in Australian and US dollar terms. It's been hitting record highs lately. And unfortunately, that so far hasn't trickled through to the equity prices. But the cycles change, it comes around, and our objective is to be positioned, drilling, hopefully defining resources at a time when that equity market for the gold sector does turn. So our focus this year is to drill through three of those projects that we have in our portfolio. We've got Brimstone, Xanadu, and Beatty. So we've got 3 projects, but there's 5 prospects within that we plan to drill in the next 6 months. So it's going to be a really active time ahead for us, and that'll give us the ability to generate a lot of news flow. Our first project is our Brimstone project. It's located about 30 minutes drive from Kalgoorlie. We've got a 70-kilometre square package of tenements here. You pass Kanowna Belle when you drive to site, and we're in close proximity to the Penny's Fine Gold deposit, which is owned by Horizon. They've historically produced nearly 20,000 ounces there at 4.5 grams. And they're currently going through a permitting process, looking to extract another 42,000 ounces out of that at over 5 grams. So we're in a really nice area for finding high-grade gold deposits. They may not necessarily be that big, but you do have the opportunity to monetize those with some of the mills in the area. So it's low-cost exploration given its proximity to Kalgoorlie, and we've got a bunch of targets here. There's been about $5 million spent on the site by the previous explorers, and the majority of those holes have been less than 100 meters depth. So our plan is to come back through and follow some of those anomalies up. There's been quite a high concentration of drilling around one prospect there called Garibaldi, which is on strike from that Penny's Fine deposit. And that'll be a focus of our next round of drilling. So we've actually structured our drilling into a 3-phase program here. We just completed the first phase of air core drilling, and it outlined a number of new anomalies here. And we're about to come back through, hopefully in July, and complete a second phase of drilling, which will be RC. And so that'll be following up the targets that we just defined, plus following up the Garibaldi target. And why Garibaldi is attractive to us is you can see here in this oblique section from some of the historical drilling that we're getting some really nice grades and widths. So 55 meters at over 2 grams, 34 meters at 2.8. And in some instances, you get really high grade intersections within that, like 7 meters at 10 grams. So that's the style of target that we're chasing in the Brimstone area. Our second focus this year will be on our Xanadu project, which is located in the Ashburton Basin. Probably a little bit, probably not as well known to people, but the Nar-Jugadi Fault Zone, it's a 470 kilometre crustal feature running through this basin. There is a number of multi-million ounce deposits on this structure. You've got the historical Paulson's mine, which extracted nearly 1 million ounces at over 7 grams. So really beautiful deposit. Karlawinda down on the southern end has recently just gone into production at about 120,000 ounces a year. And then you've got the Mount Olympus deposit, which sits right adjacent to our tenure. It's got about 1.44 million ounces in it at over 2 grams. So really interesting area. We've got a 560-kilometre section of this fault zone and its splays. Historically, there has been quite a bit of activity on the northwestern end of the prospect. We've got some prospecting license there. A number of companies have gone through drilling this, looking for oxide gold resources. In fact, there's been a small little mining operation and a heap leach project. But that light blue section represents a zone of about 10 kilometres, and it's been very intensely altered. There's been a lot of fluids coming into this system. You'll see some quite large intersections, 56 metres at 0.9, 83 metres at 0.6. And within this, there's a number of structures that, host much higher grade mineralisation, like 12 metres at 5. So our objective has been to come back and do systematic exploration here and try and get a much better handle on the whole geological structures here. We did a major program of geophysics. And what we were really looking for there was to try and see whether there could be some presence of sulfides at depth, which was the feeder structures coming up into this system. So our plan is to tackle this project in a two-phase strategy. We've got the oxides that are shallow and on surface, and then we want to come back and do some deeper diamond drilling, looking for those sulfide targets at depth. And we also recently announced, we've got a big package here. We've got about 45 kilometres of that Narja-Gadi fault zone and its splays. But we did announce recently a discovery of a new area called Hermes. It's got quite a large and growing footprint now. We've got rock chip samples going up to 1.9 grams. We believe that the rocks look really similar to the Mount Olympus deposit, which is on a structure about 8.5 kilometres to the northwest. So we're this week doing our cultural heritage clearance work there, and we're hoping to get on the ground late in July to start an RC drilling program there. So a really busy time for our Xanadu project, because we've got the RC drilling at Hermes, and then we also want to do a few RC holes back at what we call Xanadu West, and then we want to do the deeper diamond drilling on what we're calling the Xanadu Deep. So really active program there coming up. And then the last project we've got in our portfolio for drilling this year is the BD project. We're just to the south of Norseman, so we're about 50 kilometres south on the Norseman Greenstone Belt, 5 million ounce historical production. There's currently 5 million ounces of resource in place here. The attraction that we've got here is that the Scotia Mining Centre is about a 1 million ounce resource. It's just 10 kilometres to the north of us. And then you've had Aruma Resources, who's presented at this conference. They've had some really great intersections at Salmon Gums Prospect, and those structures run through that property, and we'll be looking to drill them probably in the fourth quarter this year. I think just introducing the team that's obviously got to deliver this work this year. I think Rowan and I work really well together. I raise the money and he spends it. But he's purely a West Australian focused gold explorer. Prior to joining Platina, he worked for Gateway Mining. He was part of the Hemi discovery and has got some really great credentials for the work that we're trying to do. And just give you a little bit of a flavour, we're a 16 million market cap company, 620 million shares in issue, so we're pretty tight. We've actually been selling some investments that we've had through the sale of our platinum assets, and using that to fund our exploration and until the Rio sale closes. So if you're looking for a company that's going to be extremely well funded to achieve its objectives this year, targeting tier 1 deposits in a premier gold jurisdiction, I suggest you have a good look at Platina. 3 drill programs this year covering 5 prospects. Thank you very much.
You nailed it. Well done. Now, if you're staying to the end or wondering, should I nip off quickly? So we're closing at 4 o'clock this afternoon. 2 really good presentations at the end. One is Toubani. So Toubani have got the world's, they're producers of the highest quality iron ore lump in the world. And they've just got multiple offtakes they've been signing up for as well. So a really interesting prospect for you. We've also got the inimitable Rob Murdoch. So Rob isn't actually selling you something. He is using his years of experience and his analysis to perhaps point you in the right direction and the opportunities as he reads them. So you're more than welcome to stick around and listen to him because he'll be very interesting. Now, can you pull those microphones down in front of you, dear sir? This is a junior gold explorer here in front of us in WA, and right in the middle of everything that's going on up in the Murchison they've got 500,000 ounces of gold so far. God knows how much more they've got there. So we're going to ask a geologist that question to unlock that story for us. This is one here. He's the MD of Gateway Mine. Would you please put your hands together and welcome Mr. Mark Cossom.
Thanks, Chrissy, for that introduction. And I suppose when you said junior gold explorer this way, that's all right. Thanks to Vertical Events for putting on, giving us the opportunity, and thanks to the audience here and online for tuning in to listen to the Gateway story. Standard disclaimer, which can be viewed on the website. I guess myself, a geologist and a gold geo, been involved for a fair while and been lucky enough to be involved with a couple of successful discoveries and companies over time. And I often get asked, what was it about Gateway that attracted you to Gateway and why did you want to be there? And it's really come down to three things. The quality of the project, it's a single asset company. We've got a great project in the middle of a key part of the West Australian goldfields, and it's really got a lot of potential to go further and a lot of good attributes going for it. The second was the people involved. As we'll see, the people involved at Gateway have a really strong skill base, but not only that, a track record of doing things and getting things done. And the third was the shareholder support, and we've got a really supportive and strong shareholder base, and they've been behind the company for a while and really helping us out. So the project itself, our Montague Gold Project in the heart of the Murchison Goldfields of WA, about 800 k's northeast of Perth. There was 5 little open pits mined there in the 1990s by Herald Resources. But really since then, not a hell of a lot happened until Gateway got serious there in 2018. And since 2018, we've been able to put together a resource base about 500,000 ounces so far, including 3 brand new discoveries near some of these old mining areas, and there's plenty more to come. A lot of these resources are in the top 100 metres. They're generally oxide deposits. In an active part of the Murchison, that's a really important thing to have on largely granted mining leases. But really we see the big potential of this project is to grow further. Now that we've had that success and got our head around what's going on there, we're really being quite aggressive now to jump that up over 500,000 ounces towards that magical 1 million ounce mark. And as I mentioned before, the people involved know what to do and how to get it done. Quick corporate summary. You can see with 260 odd million shares on issue, fairly tight. Really, one of the things, and junior gold explorers are what they are at the moment, but I think you can see with that enterprise value there and the deposits that we have and the quality of the deposits that we've got, that's pretty highly leveraged to any sort of uptick in the sentiment in the junior gold sector. We're poised to really rebound back from there. I mentioned our shareholders before. Our major shareholder, Kerry Hermanis, who's been there since 2018, really supportive. Pete Langworthy also involved. He does a lot of work with Kerry and been involved in some successful companies, our second major shareholder also. So the team behind Gateway, myself, I mentioned before, a geo. Last job before Gateway was with Dynamic Metals. There's a few of us ex-Dore people floating around. Our chair, Deb Fullerton, prior to her job here at Gateway, she was the CEO of Westgold, which is one of the main mid-tier gold producers in the area where we are. She's just also recently come on board with the Dreadnought team. And then Peter Lester there, he came on board last year, mining engineer, about 40 odd years experience. Been involved in a lot of operations, a lot of project construction and development through gold mainly, and a lot of M&A experience as well, including with Owen Hegarty and the Oxiana guys. So where are we? We're in the heart of the Murchison Goldfields of WA. This is an actively producing area. There's 4, nearly 5 operating gold plants within 150 k's of where we are. It's a great place, WA, in terms of not only the prospectivity for gold, but also the pathway to development. It's well known, well established gold mining in WA. It's a great regulatory environment to operate, and everyone over there is understands gold mining and the services are around to get things done. Where we are, the infrastructure is established. I mentioned the processing facilities in the area, but not only that, all the roads go straight through our project. We've got haul roads established on site, pipelines and the like. And the key thing there as well is that we're in a part of the Murchison that really all the ounces in this area are controlled by 3 junior companies. So as far as corporate activity and potential consolidation in the future, it's a pretty key area, and already starting to see that now with Westgold launching a takeover bid for Musgrave Resources out to the west of us, and Ramelius have started getting active in the M&A space as well. So it's a great place to be for a number of different reasons. We know to demonstrate over the last 4 to 5 years that we can not only find gold, but turn these into mineral resources and take it forward. And I mentioned before that over 70% of our ounces are within the top 100 metres. We've got a high-grade indicated resource there of 140-odd thousand ounces over 2 grams. But a key thing is that initially we had our 2 first resources under 2 of these old open pits that were mined in the 1990s. But since then, we understood the geology. We took that knowledge that we'd gained from those, and we applied it in the local area and made 3 new discoveries at Evermore, at Achilles, and at Julia's. And we're now applying that knowledge further to really try and jump this project up and make a series of new discoveries in the broader area of this 1,000 square kilometres that we control over this part of the world. 4 of our 5 mineral resources are located on granted mining leases, which dates back to the 1990s, and just a peculiar sort of anthropological fact of the area where we are is there's no traditional inhabitation of the area, so there's no active native title claims over our part of the world. So the pathway forward to getting these things into production is really simple and really straightforward. I mentioned before where we're going now, and this sort of highlights that area in green there. That's where our existing 500,000 ounces sit, but we control 1,000 square k's of tenure over this part of the Greenstone Belt in WA. And not only that, we've got about 40 kilometres of strike of this Tokay shear zone, which is this major mineralised shear zone. Over 1 million ounces been discovered and produced on it to date. And we're really able to sort of step out along that structure and find more. So we've just been this year undertaking a major targeting study to really kick off. We're about to start drilling next week to really follow up on some of this work. We employed some key structural consultants in Perth, Model Earth, who are recognised as being experts in this area, identified some targets both through their work and also going back through the historic work in the past. You can see some of those drill intersections there that haven't been followed up. We've gone out, we've just completed a soil sampling program and a seismic geophysical survey. We're about to start drilling now to follow up on some of this work. There we go. So this soil geochemical survey we completed about a month ago. We're just starting to see these results come through now and hopefully start to compile them to follow up with further drilling. We were testing over 15 kilometres of strike of this major shear zone to the north on tenements that have only just been granted. So this is first pass, early exploration. Really, the key for us is to put this together, generate these targets and get out there and start drilling. So there's a lot of work to be done out there, but it's really exciting for us because, as I mentioned before, we've been able to demonstrate there's a lot of gold still to be found here. We also completed a seismic survey around our existing deposits. And the key to that is really once we started to understand that these deposits were related, they're all part of a big major gold system. There's already about between past production and our existing resources and our neighbours' resources, about 1 million ounces sitting around this key feature, which is called the Montague Dome, that pink blob there in the middle of that page. We did these seismic surveys to have a look at depth, what's going on with these host structures, and that's really geared towards future deep drilling to test these at depth and really have a look at what's going on and how they all come together. We've got an EIS grant from the state government of WA, which has been awarded to us, so we're able to co-fund that deep drilling 50% with money from the state government. And just to highlight that fact of what the potential here is, we can see this is on our main shear zone that hosts over 230,000 of our existing resources, but with past production, this is over 300,000 ounces have come out of this structure. It's about 4 kilometres long to date, but you can see there, this is a long section along that structure. The deepest hole, which we drilled back in 2020, is only 250 metres below surface, and that hit gold 3 and a bit metres at 5 grams. So it's completely open at depth. A lot of the work in the last sort of 10 years in West Australia has really shown that these big gold systems, when you get onto them, they do continue at depth. They do keep going. They're all related to each other. And this is a real opportunity here for us at Montague to make significant discoveries at depth below our existing oxide resources. Not only are we looking for new discoveries, but we really think there's still a lot of potential around the existing areas where we've been working alongside our current resources. And just to highlight that here at Achilles, excuse me, we've got an existing just under 100,000 ounce resource. It's all in the oxide zone. It basically starts 4 metres below surface. So this is, been sitting there. It was simply found by drilling along strike from a little pit that was mined in the 1990s. It wasn't really rocket science. It was straightforward exploration. There's a lot of this work really still to be done. But sitting south and east of that resource, there's a big zone of gold anomalism that's been established. You can see from some of those RC drilling intercepts that we got in November last year, there's significant gold right here close to surface alongside our existing resource at Achilles. We're about to go back into this area and start air core drilling next week. So there's a real excitement here about what we can find, within a stone's throw of our existing resource. Again, another example here, Julia's. This is the latest discovery we made. It's been the focus of a lot of our work in the last 12 months. Excuse me. The existing resource at Julia's there, 77,000 ounces in that little box. That's all RC drilling there, but you can see from the air core drilling that we've done to the southwest of that existing resource, there's over 700 metres of strike of this trend still to be tested, with some great intercepts still sitting there. So there's a lot of potential to continue to build on these existing resources, with pretty straightforward work. Montague Boulder, again, this is even closer in. This is our biggest resource. There was a little pit mine there. We've currently got 160,000 ounce resource indicated and inferred under this pit. But all the work to date really has been focused on the historically mined lodes which sit in the basalt, which is that green rock you can see on those diagrams. But what we've been able to establish last year and a little bit before that was these things keep going into that Montague Dome, the pink rock on the right-hand side of those diagrams. And this has never been really followed up seriously. So, there's a whole potential right next door to that existing 160,000 ounces, within stone's throw of our other resources, to add significantly more to what's there. Little thing that we got into end of last year, and we're gold explorers. We're focused on our gold project, and that's what we do, and that's what our shareholders are keen for us to focus on. But we're approached. Richard was talking earlier about Sensor and what they do. They, through their AI technology, identified one of their targets on our ground at Montague for potential lithium exploration. There's been no work done up here to date on lithium exploration or looking for pegmatites, even though, in theory, the geological setting is conducive to it. We weren't going to go get distracted for it and start looking at things we don't know a lot about. But we did a deal with Sensor whereby they're earning into 80% of the lithium rights over these tenements. We retain the underlying gold and base metal rights and are free carried at 20%. We also have the option to claw back 10% if there's a significant discovery there. And a key part of that earning is that we stipulate that 50% of those funds earning in are direct drilling in the ground expenditure. So we get to use that data as well. The Sensor guys are going to be assaying for gold and pathfinder elements as well. So this is a bit of a free kick for Gateway shareholders. We're focused on our goal, but we're exposed to any potential there in the future. So in summary, it's a pretty simple story. We've got a great gold project in the middle of the heart of the goldfields of WA. It's a great place to be looking for and developing gold projects. We've got existing resources. There's infrastructure in the area. Most of our resources are on granted mining leases. There's really a lot of infrastructure in terms of roads and the like to develop these things. They're all within 100 metres of surface. So there's simple open pit mining opportunities there. But there's potential there to really expand this resource base and take it further. As a company, the way we are at the moment, we're highly leveraged to the current strong gold price environment, and that when that change in sentiment for the junior golds kicks through, and we've got an experienced and successful board and management team. We've been there, we've made discoveries, we've developed companies, we've put things into production, and we have a track record of being able to generate value for shareholders. Anyone wants to chat further, we've got a booth out there in the main part of the hall, and yeah, thanks for listening.
Well done, Mark Cossom. And good things come in small packages, as our mothers would say to us. Now, our next speaker is here to present a very new story, Dynamic Metals. They're only listed on the ASX in January, so they recently spun out of the Jindalee Resources. They're focusing on a really exciting portfolio of exploration projects which are based in Western Australia. And here to present the Dynamic story is their managing director, a geo that we in the West may or may not have stolen permanently from yourselves on this coast. And then we went off and we married her to another geo who's also happily ensconced in the West. So we're keeping her and her talents to talk today to you about the dynamic opportunities in nickel, lithium, and gold. Would you please welcome Karen Wellman?
Thanks very much for the intro. Yes, as Chrissy mentioned, I'm here to talk about the Dynamic story today. It's a pretty new story, and that's one of the reasons why we're here. You've probably never heard of us before, but the idea is to let you guys know what a great opportunity that we've brought to the ASX. So I'll just start off with, this is a bit of a map of where our project of our portfolio of projects sits. And so I get asked quite often, like, why I decided to do the Dynamic IPO and what attracted me to the company. And really, it is this series of projects that we've got here. They're very strong. So we've got there's three key projects: the Kalgoorlie Williamson project, which is about an hour's drive south of Kalgoorlie, prospective for nickel, lithium, and gold. We've got our Lake Percy project, which is about 150 k's to the west of that, around Lake Johnson there, which is also prospective for lithium and nickel. And then we've got a third project, which I won't talk about today, just due to time constraints, up at Deep Well there. So in Meeka with nickel, copper, and PGEs. So we did our IPO in January this year. We raised $7 million, and currently at the end of the first quarter, we had 5.62 million left in cash, and currently trading at a market cap of around $13 million. As I said, it was a 20-cent share IPO. We've got about 49 million shares on issue. So that gives us an EV of about 7.8 million. So we think we're still quite highly leveraged to success, as you shall see as we go through. We were spun out of Toubani Resources, as mentioned in the introduction. So Toubani has retained 25% interest in Dynamic Metals. And yeah, most of the shareholders are made up of high net worths, and Toubani shareholders were given a priority offer as well. As you can see, our share price has gone okay from our 20-cent IPO. We've been probably one of the better performing IPOs of this year, sitting at around that 27-cent mark at the moment. So I'll touch a bit on our projects. So our Williamson project, as I mentioned, is quite prospective for quite a few commodities there. It's a dominant land position. So it's 880 square kilometres within an hour's drive of Kalgoorlie. So, you know, we have one of the most, I think it's an unrivaled land position in the area. There's lots of infrastructure in place. The main highway, which runs down to the Port of Esperance, runs through the middle of our tenements. You've got the railway lines as well. So all the different colours on that map. The dark blue is tenements which were granted at the time of the IPO. The lighter blue colour is a series of tenements we've had granted quite recently in the last month. And the orange ones are still our ground, which is pending as well. Also quite important to note is that we have 100% of all the mineral rights for exploration on these tenement licenses. We haven't divvied anything out. And, you know, as the area is, it's been exposed to a lot of exploration in the past. So we have a lot of historic data to go with in terms of the nickel and gold potential, but the lithium stage is sort of still a bit earlier. I'll go into the different commodities in a bit more detail. So, yep, Kambalda goes hand in hand with nickel. So a lot of nickel's being produced there, high quality nickel mines. Our tenement package, as you can see, sits quite adjacent to several operating mines, such as Mincor's Cassini mine, which is most recently opened. Our prospects are all within quite a short trucking distance to BHP's Nickel West operations. And yeah, as I said, we had a lot of data to go with prior to the IPO. One of the advantages of being spun out of Toubani Resources is that the exploration team has been working together for a couple of years on this. So when we IPO'd, we hit the ground running and we went into our first drill program within 2 weeks of listing. And as you can see there, we've done 3 programs around Williamson based on the nickel program. So our first drill program was Geordie Far West. And we had success with that. As I said, we did that within 2 weeks of listing. We went out there. This is a prospect that has had some drill holes that were drilled by Mincor back in 2007. And Mincor did intercept some interesting results, sort of 2 meters at 1.4% nickel. But at the end of the day, they decided it wasn't high in their list of priorities and they moved on to other targets. We decided we would test out what was going on there. We did a bit of geological modelling ourselves and decided we would drill 5 holes. 5 RC holes just along 4 sections and see what those results were all about. So we were quite excited by what we ended up getting. We got some quite strong results back, including 16 meters at nearly 2% nickel from 27 meters depth. And that included a zone about 5 meters at 2.84% nickel. So that's pretty solid nickel results to get near surface. All of these results were from the weathering profile. So what we're targeting around Kambalda is fresh rock nickel sulfides. So while they're quite encouraging, we're still on a mission to find that fresh rock massive sulfide. So what we did after the success with these first 5 holes, we went and drilled 2 more holes opportunistically to the southwest. So they were on existing clear drill lines, so we didn't need to go through any more permitting. We're still waiting on the assay results for those ones. Meanwhile, we're going through the process right now and planning for testing extensions to the south. We just need to go through a bit more permitting now. So we plan to get back out there to Dordifar West in the second half of this year for some more drilling. So in terms of lithium potential around Widjimultha, it's really starting to emerge as a key lithium belt in Western Australia. As you can see from this map here, our tenements all sit well within the lithium Goldilocks zone. You've got quite a few larger projects in the area with Mount Marion up there in the north, Bald Hill over to the east, Baldania to the south. And then, of course, you've got the Essential Metals projects, which sit adjacent to our tenements. So that's the Sinclair mine and the Dome North project. And I'll talk about them in a bit more detail. We've seen that other companies have had a lot of success recently in terms of timelines. So if you get onto lithium, and that's one of the great things about working in West Australia with all the commodities, if you get onto something, you can move quite fast. So I think our friends up at Widgie Nickel demonstrated, they went from rock chip samples at Faraday there to drilling it out and getting a mineral resource out in a pretty short time frame. I think it was less than 9 months. So yeah, that's one of the exciting things we like about working in WA. So as I mentioned, the area is pretty much, in terms of exploration strategy at lithium, we've had to take a bit of a step back because we don't have access to the same data, historic data that we do for the nickel and the gold. A fair few of these tenements that we've got have all been held by Jindalee or Dynamic during this current lithium boom. So we sort of retain all the potential upside to making any discoveries there. So one of our quite recent announcements was about the granting of these additional tenements I mentioned earlier. So to the south end there, you'll see around the Pioneer Dome West area. That's quite an exciting tenement that we're quite happy to have granted. And that will be the focus of our lithium exploration activities. We plan to get out there with some soil sampling in sort of July, August. So that was part of our staged approach to lithium exploration. We've done the data compilation work. So you can see we've got some sniffs of lithium in the area as the coloured dots there on the map. But yeah, we need to get in ourselves, do the surface reconnaissance work now that the tenement has been granted around Pioneer Dome. That opens up 20 kilometres of prospective strike. So if you're familiar with the Essential Metals story, that was recently subjected to potentially a $136 million deal, which was turned down by the Essential Metals shareholders. So yeah, it's quite lucrative to be around there. So the edge of the dome, you'll be able to see on the bottom there, it's that tenement E151721. So you can see the Sinclair mine. It's a mine that's already been mined out for lithium cesium tantalum. On the north side is Dome North, which is a current deposit of theirs. And you'll see that if you can follow the geology around, that's the area that we'll be focusing on. So once we complete the soil sampling programs and get our results back, we'll move on to drill testing any targets we develop. And of course, it wouldn't be the goldfields without gold. There's plenty of gold targets there. So the orange coloured labels on them are all the gold targets that we have generated on our tenements. The darker colour are known deposits and mines in the area. Just a sample of them though, because there's too many to put on the map. So the tenements, as you see, they're quite adjacent. They're adjacent to, next to the St. Ives Gold Camp, actually, as a strange coincidence, where I first got my first job in WA. So I am quite familiar with the area. Yeah, but quite a rich gold camp, over 16 million ounces in there. And we have a lot of historic data to work with and a lot of intercepts to follow up on. So since we listed in January, we've completed 2 air core programs out there at Higginsville and Mandilla, and we're still waiting on assay results from them. Moving on to Lake Percy. So Lake Percy, as I said, about 150 kilometres to the west of Widjimultha. And the area is prospective for nickel and lithium. It's previously been explored by a few people. Anaconda and White Cliffs and Liontown have had a little bit of a look at the lithium as well. It's the northern extension of the Lake Johnson Greenstone Belt. We've got 15 kilometres of an ultramafic belt that we're testing for nickel, and we generated 8 targets prior to the IPO that we were going to go and test. As you can see from this map too, we've also put in the lithium occurrences. Once again, it's really starting to heat up in terms of the potential there. So it's another thing we've got our eye on. So we completed a big program there since January as well. We did that in March, April, where we've done nearly 6,500 meters of air core and RC drilling as our first test of nickel targets. We also had some pretty spectacular results there, which highly encouraging for a brand new company. So in this program, we had 100 holes planned and we drilled 102 in the end. And the aim was to get fresh rock geochemistry information. It's an air core program. We just wanted to get through into the fresh rock. What we got as well, we got quite a few nickel results, significance in the weathering profile as well. So a couple of these results, as you can see there, there's 16 meters, 1.1% nickel and 645 ppm copper. And the copper is quite interesting, and that's that's really encouraged us to think that we're onto a fertile nickel sulfide system, because with the ratio of nickel to copper there, it indicates we're onto Cossom, and we know Meeka Gossom. It's an indication of sulfides being in the system. Won't get too technical, but it's very encouraging for when you're looking for nickel sulfides. So just a quick view of what we've got coming up in FY24, all subject to change. Dynamic was a little bit of a pun and a play on words as well, because we do like to keep ourselves pretty flexible and move on, as we showed with the Dawdy Far West program. We only had one program planned initially, when we've gone on to completed 2 already. So yeah, first priority is lithium mapping and sampling around Widgie-Multha, which we'll do in July and August this year. We've scheduled in Dawdy Far West drilling a bit later in the quarter. And then we'll be moving on to a couple of exciting targets, which we haven't spoken about yet at Democrat, which we'll have to wait for an ASX announcement on that. That's on some recently granted tenements, but it's quite exciting nickel target through there. And you also see we'll head back out to Lake Percy and up to Deep Wells. I didn't get a chance to mention that today, but stay tuned for more information. So I think quite importantly, we have a very strong portfolio of exploration assets, and the portfolio has depth and strength to it. It is strategically located, and quite a large land position that will not be easily replicated. We've got exposure to the right commodities with nickel, copper, gold, and lithium. We generated a lot of, we kind of set ourselves up for success. There's a reason why we have been we've performed well in the IPO to now, and that's because we spent a lot of time and energy on developing up these targets, and our results that we've got in these first 5 months of existence reflect that high quality work and effort that was put into our target generation. So I hope that's showing everyone that we know what we're doing and there's a lot more to come. So yep, as I said, the team's got quite a lot of experience in it. We've done everything we said we were going to do in the IPO and more. And I think, we are quite highly leveraged to success going forward. We really have achieved a lot in a short space of time. We've drilled over 10,000 meters in this first 5 months with a fair few more thousands to go. So we have cash and the pipeline of drill targets. So yeah, plenty of news flow to come in the future. If you want to hear more about any of the particular areas or anything, you can find us at our booth out there. All right, thank you.
Karen, it's a bloody good job. Well done to you. I need to tell all of our explorers now, miners, when you finish your presentation, there's your camera, there's the other part of the audience too. Make sure you flash them a great big smile as well. So for everyone who is playing along at home as well, remember you may not be able to talk to our presenters here, but they all welcome you to get on the blower and give them a call as well, because they'd love to follow up any questions that you have. It has this for a bit of synergy too, 6 degrees of separation in the resources sector, because Karen is best mates with one of my best mates, who's also a female geo, who's come from Melbourne across to Kalgoorlie, which is where we met. Mark, we've worked with and lived in Kalgoorlie with as well. This fellow who's coming up here, he's Kalgoorlie as well. So we've all got some sort of little connection to one another. And this guy is fantastic value. And he's done some really interesting projects over the years as well, and had some really big successes too, mainly in gold they were, weren't they? So we're going a little bit, we're going tin tungsten this time, still a little bit of rare earths too, you're heading for now as well. So if you don't know him, haven't met him before, his name's Andrew Radonjic. He's the MD of Venture Minerals. He's actually a he's an overachiever as well. He's a geologist and he's a mineral economist by trade. And he's got more than 35 years of experience as well in both mining and exploration. Here to talk about the future of Venture Minerals, will you please make him welcome?
Thank you for the intro there, Chrissy. Appreciate it. Yeah, look, good afternoon, ladies and gentlemen, and certainly it's great to be here at the Gold Coast Conference again. I think I've done about a number of these shows, but familiar faces and lots of investors out there, and they've come through the booth. And like I said, come and see us. There's a lot to get through, so I probably won't get through all of it, but if you want to talk about those other projects, please come and see us. But today's focus is very much around the Mount Lindsay project, which is a critical minerals project. Main focus is tin and tungsten, which I'll talk a lot about, but we're also talking about boron, and we're looking to be potentially Australia's first boron producer when Mount Lindsay goes into development. Also going to give you a bit of an update on the activities by Chalice Mining at our Southwest project, and a little bit about our recent push into the rare earths sector and how all that came about. Now, the Mount Lindsay project is been previously mined over 100 years ago. We've already spent $45 million in this project. We've done over 100,000 meters of diamond core drilling. There's also an open pit feasibility study we completed in 2012. And also it's one of the largest tin tungsten deposits in the world. So it's certainly a very unique asset. And the great thing about it, it's in a tier 1 jurisdiction in terms of renewable energy. So we've already got hydropower going through our tenement. There's wind power feeding into those turbines, into that line now as well. So, you know, the west coast of Tasmania is already a net zero emissions area. So a lot of that power comes from Tasmania, gets pumped to the mainland. So it's all green energy. The great thing about tin that you probably don't know is that the price is well above 10-year averages. 10-year average is about 20,000 currently. Today, it's now $29,000 per ton. It's over 3 times the price of copper. Now, tin is an EV metal, and I'll explain that in a bit more detail, and it is critical to the world achieving a green economy. Certainly the time for tin is now. Now, we started this new journey on Mount Lindsay just recently, and we started collecting around about 10 tons of sample. And what we had is we started a new metallurgical processing route to simplify the extraction of tin, tungsten, and magnetite. It was all part of this underground study. So we were going to go completely underground, redesign the mine, and reduce our footprint substantially from about 200 hectares to something like 60. All the tailings and the waste rock will be going back down the mine, and we'll be using battery electric driven equipment. So that was the idea when we were doing this study. But in parallel, we had CSIRO trying to unlock a major source of tin, which wasn't being extracted in this process. It was all more about gravity, but as a tin borate, tin and boron mixed together with iron, which there's a fair bit of this tin sitting in the system at Mount Lindsay, which we can't recover in that system. So we asked CSIRO, can we actually extract that tin? And what they found is, firstly, they said, yes, you can, and there's a great opportunity to get some economic benefits to add to the project. And also, they demonstrated to us that in China and also in Russia, they're already doing this. So we're gonna go through to the next phase, get that tailings, and see if we can extract the boron, and the iron, and tin. So instead of having sort of like a 5 million ton mine, we might have a 15 million ton mine, for example. So we'll re-optimize all that in probably 12 months. So that's a bit of a pause button, if you like, on the feasibility study, but I think we've been added a lot of value. And, you know, all of a sudden, instead of having 80,000 tons of tin metal at Mount Lindsay, we might have several 100,000 tons available to us. I'll update you about the Chalice activities. As I said before, they've gone to the stage 2 of the JV, more importantly. So there's 4 targets there they're looking to drill in the Q4. We found some rare earths at Mount Lindsay, which moved us on to the JV, which we recently did just 40 kilometres to the east of the Algoo in Western Australia. The iron ore mine remains on care and maintenance. Certainly when the price starts getting around about 130, today it's 115, it starts getting to be of interest for us restarting it. We had a bit of a look at this, a hard look at this in February. So it gives us a free option to the iron ore price. We just did a JV at Golden Grove Northwood Sensor, so I'll talk a bit more about that. Probably won't have much time to talk about the Coolum project. Just a corporate snapshot briefly. You can see the market cap there is just under $30 million. You know, we've listed back in 2006, fairly mature company. We've done a fair bit of work. Like I said, we spent $45 million in Mount Lindsay, and we've diversified. We are very truly a diversified explorer. Mount Lindsay itself is diversified, and it's all commodities. So it's been pretty much one of our strengths throughout. And you can see it from a major shareholder base. Dale Elphinstone, who's probably the richest guy in Tasmania, is still a major shareholder in the company. The team has been there since 2006, which is great in terms of the belief in the company. But when the downturn in the commodity prices in 2014, 15, 16, 17, the dark days for the resource sector, we all hung around, and this allowed us to pivot back in 2019 when the prices went up. So it was a great opportunity. People are very important to the company and that skill set. Like I said, today I'm going to be very much focused on the Chalice and the Mount Lindsay story. But just a little bit about, for those of you who don't know Tasmania, besides the fact it's down south and it's freaking cold down there compared to here, there's also a great mining industry down there. And I was working, my first job was on a nickel mine in Western Australia. And the best air leg miners were all from Tasmania. They came from Mount Lyell, Rosebery, great history names, 140 years of mining. There's the Savage River magnetite mine, Australia's own magnetite mine. Mount Lyell's about restarted by Century Zinc or whoever's taking them over. Rosebery's MMG, 100% Chinese owned. Granger's are 50% owned by a Chinese company. Renison Bell, Australia's own tin mine, is half owned by a Chinese company. So they've clearly seen the value here. And I think some of these is a bit of a forgotten assets, if you like, of Australia. King Island being restarted by Group 6 Metals. Again, Dale Elphinstone's in that. That's on just off the north coast of Tasmania. That's Australia, probably one of the world's highest grade tungsten mines. So fair bit of history, but more importantly, Tasmania, or Mount Lindsay, should I say, has its own history. This is mining back in 1914. You can see there's not many trees standing. So some people out there may suggest it's pristine. I suggest it's not. So that's very clearly being, most of that timber's probably gone into the mine. This is just to the west of Mount Lindsay on our tenements as well. This is the Stanley Reward, 1911, these photos, alluvial and underground mining there. So you can see that there's a pipeline going there. They're actually generating electricity in that pipeline as the water came down the side of Mount Lindsay. So extensive alluvial and underground activities previously. A little bit about tin. Probably, I don't know if there's anyone else talking about tin in this conference, so I'll be prepared for a little bit of education for those who haven't heard the story before. Tin's all about solder. So solder connects everything that's got circuitry, everything that's electrical needs it. There's 4 cents of tin sitting in your mobile phone. It's only 0.7 of a gram, but without it, it does not work. It's as simple as that. That's why it's so important to decarbonising the economy. Electrification, everything, it's all about circuitry, and tin is super important for that. Without it, it just simply does not happen. You also find it in the 5G network that's going to be put out. That's obviously been stalled a little bit with COVID. EV throughout all the circuitry in your car. It's in the anodes of batteries. It improves the storage capacity in batteries. But it's usually a small component, an alloy to all of these. You don't hear a lot about it. There's only 400,000 tons of tin produced in the world. So it's not a big market. It is on the LME, and China is around about 45% of the world's production. It's the largest producer. Indonesia next with 25%. So tin is very, very important for us going forward. The charging stations, the fast charging stations, is about 1 kilo of tin just sitting in that alone. Who are the main producers of the world? And when you have a look at that list, China, Russia, Indonesia, Egypt, Brazil, certainly doesn't scream ESG compliance to me, or sustainable production. You go into Congo, it's alluvial production. Half the world's tin is alluvial. There is no rehabilitation. The Indonesians dredge the seafloor. So I don't know if that's very good for the environment down there. And that's where a lot of the tin comes from the world. So if you want to go responsibly sourced, you need to go hard rock. You want to look at permitting conditions. One of the best places in the world to be building that is Australia. So tin mine in Australia makes a lot of sense if you want to produce responsibly sourced tin tungsten. So that's a comment at the top of the slide there by Wood Mackenzie about 2 years ago. So huge amount of geopolitical risk all over that screen. By the way, Indonesia are now looking to wanting to go downstream with tin like they did nickel. And we know what happened there. The Chinese invested in all that and gobbled up all the products that came out of that. So that could be a 70% control of the tin market. It'll become essentially like a rare earth or tungsten. Now, as we segue beautifully onto tungsten there, now a little bit about tungsten. If you don't know about tungsten carbide drill bits, it's wear plating, but it's also for armor piercing shells, weapons being used by the Ukrainians and the Russians at the moment. So there's a fair bit of it getting consumed. Around about 8% of tungsten's use is in defense, and that increased by 24% in 2022. So NATO and the US and Korea are supplying all these weapons in there, and you're consuming a fair bit. So it's armor piercing, armor plating. It's all about tungsten. Very, very important. We see the use of tungsten going up, doubling by 2031. So where does the tungsten come from? Well, King Island's obviously trying to meet that demand, but the American government in this alliance with the Australian government in looking for critical minerals is looking to fund the development of assets like Mount Lindsay. A little bit more about the geology, just very briefly. Like I said, we've already drilled this out. There's 80,000 tonnes of tin metal in the same rock. There's a third of the King Island mine sitting there. It's 3.2 million metric ton units. Some of the grades there are classically like Renison Bell, like King Island. Same rock, two ore bodies, 180 metres apart in the open pit of a mine together. Underground, obviously, separate developments. You know, we were focusing originally on underground, but the bore rates may actually expand that story. Speaking of boron, just a little bit about it. There's about 1% rare earth in the magnets they talk about. There's 1% boron in it. Boron's also in computer screens, wind turbines through to magnets, EVs. There's a boron carbide, which is used to build the chassis. It's very strong, like tungsten carbide. By the way, China doesn't produce a lot of boron, but it actually imports it and then exports about 80% of the world's boron carbide product out. Solar glass or borosilicate glass, that's another big use for boron. So it's in a lot of things. There's one Turkish state-owned enterprise called Ati Adaman, which produced about 55% of the world boron. Rio produced about 25% of the world's boron from a mine called Boron, believe it or not, in California, which is being depleted. So they're looking to try and replace that. So boron's pretty important. A lot of companies are on the ASX have got a $500 million market cap with boron in it. I'll just skip through a little bit of this just to talk a little bit about our Chalice JV. And here we are in Western Australia all of a sudden. 3 months after discovery of Julimar, Chalice knocked on our door. We did a JV in July 2020. And the reason is pretty much this. This is the magnetic feature. That's Julimar on the left. That's Tor on our Southwest project on the right. Yeah, it looks very, very similar, you could say. So they signed up a JV. They did some work. They earned 51%. They then decided to go push that in July last year to go and spend another $2.5 million to take it up to 70%. They found 2 targets then. They found another 2 targets just recently, and they're going out to drill that in Q4. So getting all the permitting done now. You can't drill in the Southwest because of Phytophthora during winter, essentially. And very quickly about the rare earth. Golden Grove North was a JV with Sensor, but we picked up some ground there, which included intersection of 49 metres at 1300 ppm. That was drilling for a carbonatite. We're focusing on the clays, which are running about 2000 ppm. We've pegged 1,000 square kilometres. We've just completed a drill program there. Results will be coming out early next month. We're targeting probably 1 billion tonnes at around about 2000 ppm total rare earths. So we could have a bit of a monster on our hands out there. And I'll leave it at that. I think I'm getting the push from Chrissy there. Well, in that case, I'll just talk about the farming agreements. Sensor, we're talking, Richard Taylor was very keen to get his hands on our ground at Golden Grove North. And with his AI technology, we thought we'd give him the opportunity. So he's looking for lithium and also, like we were, another Golden Grove mine. So there's a JV. It's $4.5 million to earn 70%. if he makes a discovery in the first 2 years, Venture can claw back 10%. And that's for everything bar the rare earth rights. There's 12.5% target there at the Vulcan prospect. And as part of the earning, Central will be drilling that hole for us. So hopefully they can make a rare earth discovery and we'll take it over from there. Thank you.
Well done, Andrew. Thank you very much. Brilliant. Okay. So, do you know, anyone in this room keen public speakers? Do you like jumping up in front of the microphone? You'd love to if I offered you the microphone to jump up here and have a chat. We all have our sort of little percadillos, don't we? And the reasons that some of us don't like getting up is we don't like what the audience is going to be thinking about us. Obviously, you're here for a reason. You want to hear what people have to say, but have a bit of in mind as this man comes up here. He's got a bit of extra pressure compared to the rest of us. He's very talented in his field, obviously. He's got more decades of experience in resources. He's worked all over the world. He's got a compelling investment opportunity to talk to us about today. He is here in his capacity as the CEO of Toubani. So he's got a lot of great things to talk about. But the one person in the audience he's worried about, his wife's actually a psychiatrist and she sits at home and analyses all of his. So I'd just like to say, Rebecca, because we know that you're watching online, he's actually really happy. He's had great meetings with people. He's in a great frame of mind and he's feeling really positive about Toubani. So don't ruin this for him. Okay, would you put your hands together, please, everyone, for our CEO, Mr. So Phil Russo. And as I said that, a phone call came into the special hearing things that I've got to go with my phone. So my apologies. Can you just try that again with feeling so Rebecca's not analysing me as well? Ladies and gentlemen, please put your hands together for Phil Russo.
Yeah, thanks a lot. That's funny because it's probably true that she's on the line here, but yeah, thanks for your time. I'm excited to talk about the story. Just sort of 3 fun facts that occurred to me over the last couple of days. I believe we're the only African-focused stock here, so I thought I had a niche story to begin with, but I think that's added to that, and I recognise that for some here that's a level of jurisdictional risk for you, but I would argue we don't have any exploration risk, and I'll tell you why. But I also argue that you're well compensated at our current price, and I'm also going to hopefully convince you by the end of this 15 minutes or so that I have here that we're the cheapest gold stock here, and I can make that claim, and I'll show you why, because we don't have to find any more ounces. We've got all the ounces here. We've got a permitted DFS project, and new management and new board. We were listed late last year. We inherited $110 million of invested capital into this asset already. So we've got a wonderful head start, and I'll show you how we're going to create some value here. So on balance, I would just argue that consider the story on balance for your portfolio. So who we are, Toubani, we think we are the next West African gold mine. The main project is called Kabada. It's compelling for these reasons. It's oxide dominant. So of our 3.1 million ounces, 1.6 is oxide. I'll talk you through that. That is free milling, free digging material, no drill and blast. We've got the scale here. Like I said, 3.1 million ounces already discovered. And we can do 100,000 ounces a year for 10 years as our base case. That was the previous study. New management, new board think we can do something bigger and better than that, which makes us even more attractive in the sector. We're a permitted project. So once we get our ducks in a row here, the timeline to production is closer than others. And we're really focused on margin. For us, I was at Perseus before this, and if you look at Perseus, you look at West African Resources, what makes those guys tick is low-cost assets generating lots of cash. And that's what we're focused on here. Because of that oxide rock, we can do this. We're underexplored. I'll talk to you about a discovery we made a few months ago. So even though this has had 150,000 meters drilled, $110 million of capital invested, we're still making discoveries. This is a camp district play. And to underpin that story is the valuation I'm talking about. Toubani today trades at $3 an ounce. I don't think this sector, this junior development space in West Africa has ever been cheaper, but $3 an ounce for something that can be a mine tomorrow is pretty attractive. And I think that means we've got a low downside, but lots of upside here. And so you can see where that takes you against peers. and the M&A activity in West Africa. So yes, we're in Mali, southern Mali, where all the big elephants are. We're south of Bamako. Mali is, in some respects, is two tiers. The north there is where you see all the noise in the world, but we're in the south where we're the engine room of the Malian economy, and we're down there. We have no troubles. We're, again, like I said, we're permitted. The wheels of government still turn for us. We get our permits in place. Our reports are done. We have a really favourable tax regime there, so you get a tax holiday there for 3 years. The only royalty we have on this is the government royalty of 3%. So for our perspective, we're pretty encouraged where we are. And just to underpin that West African story, there is a suite of capital and activity in West Africa. These are the recent mine builds over there from big reputable companies that get things done, I would argue, quicker to find and develop an asset in West Africa than it is probably to do that in Australia. And then to the right, it's just the last 2 years of M&A activity in West Africa. So, there is a suite of capital there, and if you have the right asset. Quickly on the overview, like I said, listed last year, 100 million shares out. I would just say that we're really, for an asset, for a company of this size, we are got some really good backers. So Nero Resource Fund there's at 17%, Ausbil, big Australian fund, 4%. And then Perennial just went substantial and asked a couple of weeks ago, they got 7%. So we're strengthening this register with the big institutions in Australia and globally. And that speaks to the vision that we have for the asset. That's why they're there. And I'll also tell you that on those options and warrants you see there, they're all priced at around 26 cents to $1, and our share price is 16 cents today. Certainly management and the board, we're not really going to make any money here until the stock doubles from today. So we've got some skin in the game. We've been buying stock at this level because we believe in the asset here. So since joining in January, this is what we've done. We've been doing what we say, oxide dominant strategy. We bolstered the technical team. We killed our TSX fee listings. We only have one listing now in Australia. We've made new discoveries and we strengthened the board. We really have a bit of a rock star board going on here. I'll talk to you about that. And the last piece that I promised the market is we're reviewing that study, that 100,000 ounce a year study, for something bigger and better. And we'll have some commentary out on that in the next few weeks. This is the board and the management team. Some familiar faces, I think, for some of you guys. Mark Stryzek there was ex-Tieto. I think people will remember Tieto, small market cap to 800 mil market cap, West African gold producer. And I think he sees being able to replicate that here at Toubani. Scott Perry there is a ex-World Gold Council, major gold producer CEO. Danny's Glencore, Tim Kessel's a renowned deal maker. So we've got the right people in place to unlock this asset and make money for investors. This is the prize. Like I said, 3.1 million ounces in one big pit. What's unique here is the soft rock goes down beyond 70 metres, 70 to 100 metres for 5 kilometres long. That's free dig material, no drill and blast, shoots through your mill, 100 metres deep. That's really unique. Other West African projects, you're looking at around 40 metres. We've got a low strip ratio there. So when you see that grade, and I'll talk to you about that in a second, not all grade is equal, and I'll explain why we think that. Again, because this asset's been had a history, it's important to remind people that it's underpinned by some impressive results there. If you go through that 5 kilometres there, you see some ripper results that if we started to release those today, would be $100 million, but we're 15 mil. But you see things like 60 metres at 3 grams, 56 metres at 2.8, like they're peppered throughout the ore body. So it's got some good fundamental basis here that demonstrates to us this thing's a mine. This is the production schedule that was done by previous management team. Again, 100,000 ounces a year for 10 years and then stockpile rehandling in the last 6 years. We think there's a way to re-optimize that to shoot for something bigger and better, something pushing closer to 130,000 ounces a year plus is sort of the target for us for a good initial 8 or so years. And that is certainly an initial target, but oxide dominant. You cannot find an asset that is oxide dominant to 130,000 ounces a year for 8+ years. That doesn't exist in the market. And so that's why we think we've got a differentiated project. This is more about the DFS work that we're doing. So we'll have some commentary about this in the next couple of weeks, and then we're going to go and update the DFS and rebadge this as something bigger and more attractive and distinguishable in the market. I think the previous study had an element of hard rock costs in there that we're trying to remove, and that's why we think we can get the all-in sustaining costs lower than the 970 or so that it had at the DFS 2 years ago. We think we can bring that down. That's US dollars. Again, not all grade is equal, and just to lay it out pictorially here. So margin over grade is what we're focused on, and that's what's going to demonstrate a really strong economic project. It's no drill and blast, wear and tear, softer ore, low consumables consumption, reduced power consumption. That's all the benefits of soft ore. And as I show you on the next slide here, that bond ball work index of basically less than 1, you can't get much softer than that. And so that's DFS level test work. That's why we've got an element of confidence in here. And that's the typical flow sheet from mine to mill, and that's ours. And that's why we think we can do this capital efficient by both and operating cost efficient. So the benefits are there pretty clearly. I'm not sure how much time we've got left, but just on exploration. So all those resources are in the dark red there, but we've controlled all these other structures on the ground. And where you see these numbers placed outside of that pit, we've also hit mineralisation there as well in this recent program. So that was 5 Ks of strike on that pit. We've now extended it to 11 Ks. So this is elephant country here. This is a camp district. And the best results of the program were less than 1 kilometre away from the pit. Never had drilling there before, called Kabata West, that top left there. 200-metre sections, we hit it for 600 metres. We had artisanal miners there, but no drilling. And we just dropped some holes and we find some more mineralisation. And that's all throughout our land package there. So we're really encouraged that we can keep growing this resource over time. And so last couple of slides here, we've got a really clearly defined 2-year strategy here. So I recognise that our market cap is cheap, and so we're not running to put this into production tomorrow. So if you buy the stock today, committing to you that for 18 months, 2 years, there's no wave of dilution coming. And because there's 110 million bucks already sunk here, capital structure is going to stay tight. I don't have to do any significant drill outs. The resource is there. So I'm not raising 20 million bucks, 10 million bucks. It's keeping it tight. It's de-risking the asset and taking it to a production decision. So if you buy the stock today, you enjoy the re-rate. And if you don't want to be there when we transition from developer to producer, you take your winnings and move on to the next name. But right now, today, we're just going to focus on de-risking the asset and re-rating the story. And I think we've got the hallmarks there, as I've been outlaying, to do that. This is pretty clear. I guess it speaks for itself. When I say that we're the cheapest stock going around, you see us with a bunch of other peers, but I would just argue that an oxide dominant stock that is free milling in all ore types, is permitted, is scale, should trade up the curve. And I've been arguing that and no one's telling me I'm wrong. So just it's a sign of the market that we're in today. But hard assets have a home in the gold sector. And for us, if we continue to do the work, which we have been, and delivering on what we say, that's going to keep going up the curve. So limited downside, a heck of a lot of upside here in Toubani. And I'll just leave it here. This is my last slide. Value proposition is really clear. We're $3 an ounce, peers are 17. And then, the M&A in the last couple of years in West Africa, Chessa, the most recent example, just got taken out, 100% premium on a 50 mil market cap. That was worth $70 an ounce US. So proposition's really clear. I'll leave it there. And, thanks very much for your time.
Brilliant. Well, I hope Rebecca gives you a 10 out of 10 after my shaky start. My apologies there. So my $1 million, $9,500 hearing aids actually hook up to 8 different Bluetooth devices, believe it or not. And one of them I didn't turn off, so it decided that it would contact me halfway through giving your poor introduction there. Actually, we had a really interesting investment proposition a couple of years ago. Have you heard of New Hera? Was at one of our conferences, a New Hera presented, and they were given licensing to America at the end of last year to be actually sold as a hearing aid. So mine cost $9,500. And for those of you who never had hearing aids, you can only get $500 back once every 3 years. These ones, an Australian invention, they were in the top 200 Time magazine inventions, I think, in 2020 maybe. They cost $500. $500. They look more like an earpod, but geez, they're amazing. Come out of Australia. You can buy them in America as a hearing device. How's that? But not in Australia yet. So there's a useless bit of information you may or may not want to have known, but you will want to know about Scott, who's coming up here to have a chat with us now. So this is Blackstone Minerals Managing Director Scott Williamson. He's rounding out our information-packed second session. Now, Blackstone is an Australian-based battery minerals developer. They're focused on building an integrated mining and refining business over in Vietnam, and they've recently had a pivotal development involving the National Electricity Development Plan and its effect on their proposed battery mineral refinery, which could be why this fellow is smiling so much. Would you please welcome Scott, everyone?
Yeah, thanks, Chrissy. Thanks, Vertical Events. Great to be back at the Gold Coast. So yeah, as Chrissy said, we're looking to build a mining and refining business to produce the chemical products for the lithium-ion battery. So you can see there, we've got a previously operating nickel mine in Vietnam. So we're looking to restart the mine and also looking to build a downstream refinery. And I'd say we're probably one of the most advanced nickel sulfide development stories on the ASX at the moment. So yeah, it's a vertically integrated model, mining and refining, and we've got an abundant hydroelectric power, which really underpins our green nickel strategy. So it's a globally relevant nickel sulfide district. So we've got a number of different ore bodies underpinned by one large open pit ore body called the Ban Phuc ore body. So that's a large disseminated nickel sulfide. So we've got a total of around 500,000 tonnes of nickel in resource. We're pushing for a first quartile cost position, and that's driven by that renewable power. So it's 7 cents per kilowatt hour power in the northern Vietnam region, which is driving that low carbon footprint, but also a very competitive and very skilled labour force in Vietnam. We're looking at a partnership-based model. So we're in a global search for a partner. We've just kicked off that global search in the last few weeks, and we're looking for lithium-ion battery industry players to come in and joint venture on what is a fairly major project for the battery industry. So you can see there, we're pretty well positioned with $16 million at the last quarter. Market cap's taken a bit of a pounding as everyone. So our last capital raising, we raised $60 million at 58 cents. We're today at 13 cents. So, and all we've done in that period is de-risked what we think is a globally relevant nickel sulfide project. So we introduced some of the largest institutions in the world, groups like Fidelity, BlackRock were in our last capital raising. We've got a supportive German shareholder, Deutsche Balaton. They've been with us for the last 5 years. We met them at a vertical event back in the Fremantle about 5 or 6 years ago. So they've been a very supportive shareholder. So I've got some great major institutional investors. We do have about 5,000 mums and dads, and unfortunately they're the ones that throw the share price around, not the major institutions. Board and management, many years of experience. So Hamish Halliday has been in the industry over 20 years. So he's been a real mentor for me as the chairman. We've just brought in Daniel Locker. He was previously the managing director of Western Areas for the last 10 to 15 years. That was one of Western Australia's most successful nickel sulfide mining companies. So yeah, we've also got some great support from the sell side. So I used to be a mining analyst, and that is very important to have strong support from the stockbrokers. So we appreciate all the support we get from those stockbrokers, and recently took a number of them to site, and they were suitably impressed. So you can see here, we're located in the northern Vietnam region, where we're due west of Hanoi, about 5 hours west of Hanoi, and there's the existing Ban Phuc nickel mine, and we're looking to build the Ta Qua refinery. So the nickel project is our upstream. That's where we're looking at the 500,000 tonnes of nickel over a 10-year mine life. It's got majority in the large open pit, the Ban Phuc open pit, low strip ratio, very similar to the Mount Keith nickel mine in Western Australia, which has been a very successful nickel mine for WMC and BHP over many years. The refinery is where it gets interesting. So we're looking to take the concentrate and convert it into the first stage of the lithium-ion battery, which is a precursor to the cathode. So it's a chemical product with nickel, cobalt, and manganese in the ratio of 8:1:1. So a lot of people don't realize the nickel, the lithium-ion battery is actually full of nickel. And if you want a vehicle that has long range, then you need high nickel in your cathode. So you can see here, we have a number of interests in other nickel developers, one in Western Australia, Wingelina, and two in Manitoba, Lynn Lake and Monago. So the idea being is that they're also feedstock potential partners in our downstream refinery. So 50% of our feed into the Vietnam refinery will come from our Vietnam mine, from Ban Phuc, and then 50% will be imported from Australia or Canada or other regions around the world, working with groups like Trafigura and other nickel trading groups, and also talking to some of the world's biggest nickel miners, because they're also keen to push their nickel through our refinery so they can get exposure to these downstream chemical products. The reason is that chemical products trades at a significant premium to the nickel metal price on the LME. And this is where we think we'll definitely get a premium as well. So we think there's room for a green premium, and that's why we're pushing for a net zero product from our nickel sulfide. So we're looking at a vertically integrated model which reduces the transportation of intermediate products, which is reducing that CO2 footprint. We're using our abundant renewable hydroelectric power. The pressure oxidation flow sheet is a very important technology that allows us to also reduce costs, but also the CO2 footprint of the nickel. And we're looking at a full electric mining fleet, and we've actually integrated that into our pre-feasibility studies. We've done a lot of work in West Africa. It was great to see Phil previously talking about West African gold. I've got a long history of working in Africa. Unfortunately, I'd much rather be in Vietnam at the moment. This is one of the best jurisdictions we've ever been to. A very skilled, hard-working, loyal workforce. Some of the best geologists, mining engineers, and metallurgists that I've ever operated with in any country. So, and that's really backed up by this ability to access that hydroelectric renewable power, very low and competitive labour costs, which really puts us in a really strong position. Some very competitive tax incentives in the early years as well. So well placed in what we see is one of the biggest growth stories in the world at the moment, particularly in the northern Vietnam region. Groups like Samsung and LG have sunk tens of billions of dollars into this region, and it's one of the biggest growth hubs for manufacturing, but we think over time it'll be a hub for electric vehicles and lithium-ion batteries. We also have a local group called VinFast who are currently producing electric vehicles that are being sold in Europe and the US, and they're also located in the northern Vietnam region. You can see here, this is the nickel sulfate cost curve. We've got this data from our friends at Trafigura. So you can see we'll be well positioned in the first quartile. That's driven by that low power cost and the low labour cost, but also the efficiency of our downstream processing flow sheet. You can see here, we've done some work with a group called Minviro. They're the world leaders in life cycle analysis of greenhouse gas emissions. So we have a roadmap to net zero. They have independently verified that we will have some of the lowest CO2 nickel in the industry. And that's also been independently verified by the Nickel Institute. So you can see our competitors in Indonesia up to 2, even 6 times the CO2 footprint of our nickel. And this is very important in the current negotiations and discussions we're having with downstream potential partners in the lithium-ion battery and electric vehicle industries. So you can see here, this is our nickel sulfide district. Ban Phuc sits in the middle. We have a number of other smaller ore bodies. They're massive sulfide. So we have small, higher grade, massive sulfide underground mines. And then the majority of the feed will come from one large open pit disseminated ore body, which is Ban Phuc. You can see in this slide so it all sits in one large open pit. And then you have a number of small little undergrounds, which also top up the feed grade. So 18,000 tonnes per annum will come from this mine, and it'll have a 10-year mine life, very low strip ratio. So it's all about bulk open pit mining, getting 8 million tonnes per annum through the concentrator, and then taking that nickel concentrate down to our refinery. So this is the refinery. Don't get too scared. It is actually tried and tested technology used since the 1960s. So pressure oxidation and solvent extraction. There's nothing novel about this flow sheet. It's a very clean and green flow sheet. It's a process that's been used all throughout the mining industry, particularly in the gold industry as well. So POX is a technology that's used on refractory gold, and in this case, we're using it with nickel. Has been used with nickel in the past. So we can go all the way through to that NCM 811, or we can produce nickel sulfate and cobalt sulfate as an intermediate product. MHP is another intermediate product that we can feed into this flow sheet. So you can see here, this flow sheet is very flexible on what feedstocks we can deliver into it. So nickel concentrate is our focus, but we can also feed in mixed hydroxide precipitate, which is MHP, which comes from nickel laterites. Nickel matte is another product that can be fed into our refinery, as well as black mass, which is the recycled lithium-ion battery product. So it's a very flexible flow sheet. We can also feed products that are not suitable for the stainless steel industry. For example, a high arsenic or high MgO concentrate that is not suitable for smelting. We can take that into our refinery. A lot of those products we can pay a lot less for because they have deleterious elements for the smelting process, which goes into stainless steel. We can purchase those concentrates much cheaper and feed them directly into our refinery. So a very flexible flow sheet and a very nice, clean and efficient process that we've set up, particularly for the lithium-ion battery chemical products. So the problem with the industry is there's a lot of smelters and refineries set up that are for stainless steel. They're tired and they're dirty. And what's happening is the industry is trying to retrofit these tired and dirty smelters and refineries to fit the chemical products for lithium-ion battery. And what that does is it creates inefficiencies in the process. It adds costs as well. So we can see coming in with a much lower operating cost, a much more efficient process, which is tailored to fit the chemical products for the lithium-ion battery. And we piloted the downstream refinery. So we spent 12 months on piloting. We've spent around up to nearly $10 million on this pilot plan. So that's now complete. That's an important data set for our definitive feasibility study, which will be coming in the next few months. Through that process, we've produced battery-grade nickel and cobalt sulfates. The recoveries were better than we expected. So in the pre-feasibility study, we assumed 96%, and in the pilot plant, we're getting greater than 97%. So some very good recoveries in that pilot plant. We blended a number of different concentrates and MHPs, and we took a sample subset of what we could see in the industry and what might make up a good blend for this refinery. We fed them through, and the results are coming in better than we expected. So upcoming milestones. So it's a big 12 months for us. It's really about completing the study. So we have a definitive feasibility study for the refinery in the next few months. Later in the year, we'll have a final study for the mine. We'll then look to, over the next 3 to 6 months, we'll complete this global search for a partner. We've opened that search radius. We initially were focused on South Korea. We're now opening it up to Japan, Chinese, also European, US car manufacturers. So we're going out nice and wide to look for a joint venture partner to build this. Once we've locked in that partner, we'll lock in the debt. The debt will be linked to that partnership, depending on the jurisdiction that those partners will come from, is where we'll look to the government-backed banks that will bring in significant amount of capital for this project. So this is a multi-billion-dollar NPV project. It's a mega scale project. It is so important for the lithium-ion battery industry. We don't have enough nickel projects coming through the pipeline, and these big funding partners are going to come in and build and help us build these projects. So it's going to be a significant re-rate when the market realizes that this mine and refinery will be built. Thank you for your time.
Good on you, Scott. Now, before I let you all out, bit of a highlight, what's coming up in the final session today. We have got the only company in the world with the capability and the technical expertise to maximise the true value of pine forests. You weren't expecting that one, were you? Okay, we've got the producers of the highest quality iron ore lump in the whole entire world. And we've also got here the no-nonsense investing advice, Mr. Robert Murdoch as well will be joining us. And as you make your way out, let's just ask Jet what he's doing with his little $600 ingot. What are you going to do with the ingot, Jet?
Probably put it on my trophy cabinet.
So what, so Dad can dust it for you, is that it?
Of course.
Excellent, okay. And at what point do you think you'll cash it in, or will you not cash it in ever?
No, never cash it in.
Will you engrave your name on it and Andrew's from Investigator?
Oh, maybe.
At this point in time, would silver be a better prospect for you than vanadium, considering you've got some of that in your hand?
Probably.
All right, buddy, go and get some food. You've got to fight out against these guys here. I'll see you all. I'll ring the bell at about 5 minutes to 2, okay? Thank you.